Welcome to The Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is November 18th, 2022. S&P currently sitting at 39.50. My name is Ian McMillan, and today I am joined by our two analysts, Dan Gorghuber and Kevin Ferrari. How are you guys doing today?
Doing well.
Good. So the markets this week, stocks, exciting, not exciting, anything particular that you really want to talk about right off the bat?
On the equity front, as far as whether or not it's very exciting, what was it, last week I was gone for a little bit, and I don't think it kind of seems like we picked up right where I left off. Doesn't seem like I really missed much. So
Yeah, if you went on vacation like Kevin did and didn't open a chart and then came back to work this week, not a lot from a price perspective that's moved too much.
Yeah, definitely stalled out this week.
Definitely feels like stalling out. S&P still below its 200-day, but it's still above this, what I would call it, this shorter term base here above 3,900, 3,920. So yeah, a little range bound, almost kind of feels stuck, like indices aren't quite sure what the next move is. I mean, we've had some gaps that get filled. In fact, I think the Russell 1000 kind of putting in some island type behavior today. Gap down yesterday, consolidated, and now right back above, that 183 level on IWM.
Yeah, and I think you kind of mentioned it too, that because actually I think clients obviously will see this probably like an hour or so ago. We just sent out our market update for this month.
Yeah.
Kind of reference that in there, but yeah, if you look, like especially the S&P, looked like it was going to go up and retest the 200-day again, but really didn't quite make it there this time.
Didn't quite make it. The Russell 2000, which you just mentioned, did get there last week. It has failed.
Yeah, it looked like it might have a chance.
And Dow still above its 200-day. I mean, pretty significant. Dow's not too close to losing it. And then again, the Q's not even close yet. Kind of a worser version of the S&P when it comes to distance from the 200-day, which makes sense. There's a little bit, more. I guess the S&P has more in common with the NASDAQ than it does the Russell 2000, especially with these large tech weightings that we've had build up over the last few years. All right, so nothing exciting for stocks this week, or nothing monumental as far as broad markets and stocks. What about fixed income?
You've seen some continuation, I'd say, more in the fixed income space from a price perspective, just looking at some of your longer term treasuries, even just some shorter term treasuries, your corporate bond structure. I mean, you've seen some continuation off these lows. I think I was just looking, on something like TLT. I think we've been up like 3 of the last 4 weeks. Assuming we hold,
I don't know. Have we even seen that in 2022?
It's been since about June.
I guess June, yeah, early June. We had July, we had a nice little rally.
Yeah.
So you're saying that the coast is clear? We're getting long duration treasuries?
Here comes the set up and spike.
Yeah, I hear you. It is still hard to get at least too overweight the treasuries.
No, I mean it's nice to at least see some life, but because I know we were kind of talking about this a couple days ago. Now, what would you have to see to really kind of start changing your mind about it? And I mean, I think especially if you kind of turn your time frame to a weekly, for me at least. I mean, I don't know. You still got kind of RSI pointing down for the most part, and like some of your trend indicators,
Yeah.
really haven't turned around.
No, you are absolutely right. No real divergences from a RSI standpoint. And really, I know that long-term rates, we look at TYX, 30-year treasury yields, they are below those 2013, 2014 highs.
Mm-hmm.
But TLT itself, not quite there. What about bond futures?
And
bond
obviously,
trend?
like
It's a great
Yeah.
line, though.
So no confirmation yet there from actual bonds themselves. No failed
especially
breakdown
TLT,
there.
you just mentioned that, like 102. If you look at that price level, it's kind of served as an important level before historically, and basically it just looks like it retested that, and maybe it might just continue lower. And he kind of went up there, touched it, which actually happens to be right around where the 50-day was too, which is kind of interesting. And then looks like it might maybe roll over now.
Yeah, looks like we'll see. I mean, a very, very short-term base here above 98, but given how this has behaved this year, I think you got to be pretty quick to cut it. We'll see. Could it have a little bit more mean reversion? We get back to the 200-day. I don't know. We did it in June and July. So it definitely fixed income, not out of the woods yet. And anything different in regards to junk bonds? Holding up also decently well. Still pretty dramatic downtrend, if you ask me.
Yeah. I mean, yeah, it's the same. It's pretty kind of the same deal. I would say probably maybe not as clear of a line in the sand like a longer term treasury. A little bit messier, if that's fair.
Definitely messier. Agree. Kind of down here in this, what do you want to call it? COVID and 2029 bottomy area. And I'm looking at non-adjusted. So
Okay.
on J and K.
And actually, kind of something I wasn't really expecting to be this way. I know we've talked about like convertible bonds before, but really, if you pull those up even on a weekly, I mean, really since kind of June, they've just been kind of sitting there. They haven't really.
What are you using to look at those?
Yeah, ICVT.
ICVT, yes, an
So I
old
mean, really, it's been at least
favorite.
stable. Yeah, which I
Yeah,
guess I
holding
wouldn't
up.
expect. I mean, with everything else being hit, you'd think that would too, but
That is interesting. It's a very interesting observation.
especially with that, because I think we've at least talked about that before. With, I mean, a lot of those, like if you look at the individual holdings, are kind of tech based too.
Yeah,
So
so it looks like
convertibles.
a chart.
Yeah, right.
All right, so nothing going on in stocks, or at least nothing important. Bonds trying to turn the corner, treading water, but still in a pretty dire situation. Commodities, anything in commodities. I feel like, metals get going and then they're faded.
Yeah,
We
especially the
had
industrial metals, right? This week kind of looked like they
industrial
were gonna
metals
turn around.
slap. Well, and then even, last week, gold miners, silver miners, precious metals tried to make a run for it, and those have all gotten slapped back down.
Right.
I wouldn't say that they've, ruined these, although silver miners kind of had a failed breakout. So, and that isn't, I would say, I mean, there hasn't been a ton of strength in the dollar this week to warrant that. Now, the dollar, if we're going off daily candles, maybe on Tuesday it in some type of shorter term bottom, and that was off of a pretty big horizontal level of 105, 104 and a half.
And
Where
that's right by the 200 day
saw,
too.
we saw buyers come back in there in August. But yeah, very quick to dump the precious and the industrials. What were you saying, Kevin?
Then that 105 level too is kind of right near the 200 day on like DXY, so it's kind of an interesting spot.
It is good call. Everything coming into its 200 day.
Yeah, from all different directions too.
What about you're exactly right. What about crude? Big level there around 84, 85 that we've bumbled around for, I don't know, most of September and October and into November. Looks like we want to be back below for now.
Yeah, it looks like there's then the 76. If we're just looking at like front month futures on crude, well, the 76 level, what's even 76.50 seems to be a really fairly important. Obviously, it's a recent low from that September low there. But there's looking back, in the past 2018, there was a high in there.
Yeah, good call.
Inflection points where.
Good call, Dan.
This is a pretty important level that we're coming in on where.
Yeah, you'd probably see some type of support in here. Now that we're on this side of it, like you said, this where we bounced.
Yeah, and if we, and like and if we don't, that's even probably that's also information too, right? Just a really key inflection point there on that 76 on front month futures.
And I would say that equities don't seem to be buying it yet, that there's, no pun intended, that there's gonna be a sell-off in crude. These energy stocks, yeah, they're down this week, but even on a day like today where you've got a pretty nasty candle in crude itself, and first thing this morning with energy stocks down 3-4%, they came in and bought them all up. And most of these continue to hang out near all-time highs. Definitely no willingness that at least in equities, that the energy trade is done. We'll see what the physical commodity itself does, which usually, yes, is going to spill over to equities at some point. But the breakdown, and interesting to point out, energy stocks actually did trade much more in line with crude last time during September, when crude sold off. If you look at names like ExxonMobil, obviously XLE, is that a pretty?
Yeah, I'm wondering if it tries to just continue to consolidate up here, like you said, an ExxonMobil, because it's had a pretty good move. September lows on XOM.
It has, right off the 200 day. Speaking of 200 days, and it's had 80, a real good support the last couple years off the 200 day.
So it'd be pretty normal if it digested some of that. We saw some, or consolidation and within the ongoing uptrend. It does look like there's some longer term like momentum issues maybe going on, but
yeah, it's getting a little divergy on the weekly, looking at RSI, but this continues to be the, for lack of a better phrase, the safety trade where everyone seems to be okay with congregating.
Yeah.
And like I said, every time there seems to be weakness, they come in and scoop it up. So another thing that I know we mentioned in our letter to clients this week, and we just touched on it earlier, but the dollar did break its, I guess, steeper of the two rates of trend that it's been in over the last, year and a half, kind of the less dramatic one going back to April 2021, and then really the one that began in February of this year, a much more dramatic climb that has been broken and probably a good tailwind for what we've seen out of stocks, leading into this week. And it has kind of consolidated here. Looks like on a daily chart, maybe it wants to turn around. And of course, stocks have done the same. Stocks have consolidated and now looking like they maybe not want to roll over. Any intermarket relationships that you guys are watching out there that you think clients and listeners should be aware of?
Oh, one we're really, as a team, we're really focused on is that what kind of the industrial versus precious metals. So taking something like copper versus gold.
Copper versus gold.
You know,
And is that falling into the bullish or the bearish bucket this week? It had been a nice move last week, a couple weeks before that. I mean, it's been.
Yeah, it's we talk about counter trend stuff. I mean, it's kind of been in that counter trend type of move, almost since end of July to some degree.
Mm-hmm.
But came into a pretty, last week probably came into a pretty good inflection point level, specifically within that ratio, and has since kind of sold off. I mean, what are we doing?
That long range we broke down from June. You said through most of July, we'd come all the way back up to there, and now it seems to have failed on us. We'll see. Still an uptrend, I would say. Still an uptrend, but yes, I would probably lean towards looking like this was just a counter trend move, or maybe another leg lower. Anything in regards to stocks, any particular sectors you guys like or have been popping up on the relative strength scans or relative weakness scans?
Yeah, I mean, as far as like equities, I mean, you're talking kind of about relationships there before. Like one that seems to be kind of at an interesting point, it's like value to growth.
Okay.
You can do like MGV or MGK or SPY-V to SPY-G. I mean, at least kind of this week, or really like last week, got hit really hard. But kind of looks like it's holding kind of some important levels in those relationships. Like, for example, now I'm looking at MGV to MGK.
Yeah.
On that relative, I'm actually looking at the weekly, but the kind of that 0.57. I mean, it kind of almost just looks like a breakout retest on the base from, what is this, February, kind of late October, something like that.
And that was MGV versus MGK.
Yep. So be kind of interested to see how that pans out
yeah.
next week, which, I mean, makes sense, right? Just with the way kind of energy, industrials, materials, things like that have been doing for the most part. Yeah.
What about our financials? Financials, banks, gotten a lot of attention.
Yeah, it's interesting because with like financially, taking something like XLF, it seems like it's pretty highly dominated by some of the bigger, like your JP Morgans. I want to say like Goldman Sachs.
For sure.
But like if you maybe look more specifically into like regional banks versus S&P 500 or just banks in general, it doesn't look too hot.
All that regional banks definitely rolling over on a relative basis themselves.
Yeah.
And they'd had a good September and October into October. I don't know if that goes with the falling rate thing. It's not really for us to worry about, I'm sure, to the macro and fundamental crowd that is playing into, maybe that's a reason that we're now seeing weakness in banks as rates start to roll over.
Yeah, and what even on XLF, this move is kind of like this recent move, let's just call it XLF versus SPX.
Mm-hmm.
This recent move from the August, coming into this key level, probably call it resistance for right now. What's interesting, I think, about this is, just looking at something like RSI on this ratio itself. And I guess I pulled up a 21-day RSI. We haven't seen like a plus 70 reading on that since March of 21. March of
Okay.
2021, and we, on this move now in early November, it was November 8th. We've seen kind of a register of another 70 plus reading on that RSI. So, kind of change of environment, I would say, from what it's used to in this consolidated range. If those at home can kind of maybe follow along with what we just described out there, but
Back to back, yeah, without getting oversold. Not a bad look. Now, I think you posed a great question, and this was last week when we were discussing this chart as a team, and you had asked, is this from a risk reward standpoint where you want to get long financials?
right.
And the answer to that is probably not.
Yeah, you got to see more, it seems like.
See more, and we get above this, these highs that we had in May 21 and February earlier this year, but right now, from a relative strength perspective, just one massive range that we have been in for almost 2 years.
Right.
We've been here since January-ish 2021. And they've been moved, but they've been quick moves. They have been very, very quick. Moves of financials, getting you 10, 11, 12% of alpha.
Yeah, they have
But
been
unless you're there for, the 5, 6, 7 week move that fizzles out, rolls over, resets. Based on kind of what you described with banks, Dan, it seems that under the surface, financials more than likely here, again on a relative basis, could roll over.
Yeah, it almost fits like that stalled out theme, that we've or started the podcast with, I guess, of just kind of everything kind of stalling out.
Yeah, especially like on an individual name basis, like LPL Financial. I know it was one.
Yeah, golly, that was a strong one.
Man, the thing was just a beast for how long? And if you look at that on a daily, like if you draw a rate of trend from its 2020 lows to now, it's right there. Plus, it's kind of at support to 16-ish, somewhere in there. So, that thing's at a pretty important level, and it's been getting hit hard the last week or two.
And yes, that was definitely
a leader for a while.
A leader, yes.
So that'll be an interesting one, I think. Yeah, that's the thing. Like, just really anywhere you look, nothing really gets you excited.
Well, and then you have these, these old pockets like tan. We've got N phase is back up near highs. It's been, there's just, I feel like it's there for the bulls to do something with. I definitely would say the market doesn't feel like it, for lack of a better wording, the market doesn't feel like it just desperately wants to go down, kind of like it did earlier in the year, where any news headline, anything kind of sent markets into a tizzy. I don't get that just over the last couple months. But again, it's not like the Bulls have had their chances. Dow's still holding up, but the other three, a little lackluster. You bring up things like this gold or this copper to gold ratio, Dan. That's something where you would like to see that keep going, or at least consolidate somewhere and not break down into the direction we were trying to get away from.
Right.
Foreign stocks. So nothing going on domestically, but foreign stocks, which have been out of favor for over a decade. Anything that you guys are seeing out there has caught your eye?
China's kind of had a pretty good run here, at least in the short term.
China doing what China does. It's high beta runs.
Yeah, takes off when you least expect it.
Yeah, to the upside. And then when you look at, KWeb is You take something like K-Web that's been in a downtrend for February, 18 months.
Mm-hmm. Yeah, and
This
really not good candles. Like if you look on a weekly either. So I mean, I don't think it's anything to get excited about. But yeah, they've just kind of been ripping. And like, I know we were talking fixed income before. If you look at Chinese bonds, I'm using like C-bond,
Mm-hmm.
like that around 21.75. I tried to make another run above there and couldn't quite
Couldn't get
hold
it.
on.
Yeah, that's a nasty weekly candle.
Mm-hmm. So that looks like it wants to move lower again.
Mhm.
So
I will say from a relative perspective, and when we look at our ranks, a lot of these European countries, again, on a relative basis, are holding up pretty nicely. I mean, do I want to go by Germany, EWG, or German stocks today? I don't know, but they've certainly held up better the last couple months. I mean, you've got the DAX. Now,
Yeah.
if you look at the DAX itself and not something like EWG, it's not a bad picture.
mm-mm.
Looks much, it even looks better than the Dow.
I mean, even just like when you bring up the DAX, like on things we'd maybe want to see, right? Like if we could get the DAX to maybe consolidate healthy here or even pull back in a healthy manner.
Yeah, like to like 13,900.
Yeah, I mean that would be pretty normal. It would be, still normal off of this like kind of thrusty move off the
Mm-hmm.
lower.
Yeah, this
Uh,
has been a big, is it
then
20%
you'd get your then
over
you
the
could get
last
like your
month?
risk reward trade set up and
I will say one foreign area that has fallen apart that has also shown some relative strength this year has been Brazil. It just cannot break out of this range that it has been in for going on 3 months now. Seems like, early August, mid-August, stuck there. And if you look at the Ibovespa, I mean, poor thing just got back to its COVID highs, pre-COVID highs.
And actually another country too that looks kind of interesting. Turkey has been on kind of a decent run too.
Turkey. Yeah.
just in
I don't
time
know
for
what to do with
Thanksgiving.
this thing.
Yeah, I know it's perfect timing.
It is.
And actually, because we're talking about like the foreign exchanges, which I'm not totally up to date on my Turkish exchanges, but I think the one in Istanbul, I'm assuming, is the main one there, right? So if you look at like XUO30, so I think it'd be like the top 30 stocks on that exchange.
XUO30.
Yeah, should come up. And I mean, if you look at thing priced in liras, that thing has been ripping, but you can even change it to US dollars too. And that's actually like on a weekly, it was a pretty good breakout last week. I mean, not the greatest candle this week, which makes sense if you look at like the Turkey ETF. It's kind of looking like it's at resistance, which would make sense here, but it'll be an interesting one to watch too, I think.
Wow, what a move out of that. Not the best world index through this last 12 years of a bull market we've been in, but it is certainly making up for missed opportunities
Mm-hmm.
in 2022. XU 2013 to 2020 pretty flat, which is a long time to be flat. Obviously, US stocks did a lot better than that. Huh. So before we wrap up today's show, guys, is there anything else that you want to bring to our listeners' attention? Anything you're thinking about here going into year end, maybe going into 2023, the relationships you're interested in?
No, I think in the client letter, you maybe just touch on like client letter. Maybe we talk about just kind of the seasonal strength that
Yeah.
that it's one data point and that we're monitoring it. So we have that kind of tailwind if we do start to clear some of these levels, overall. But, it's also the holiday season and going to start to see probably some lower liquidity, which
For sure. As
seems
if
like it's
liquidity wasn't low enough. Now we're getting
exactly.
into the last
Exactly.
6 weeks of the year. And everyone's already bored out of their mind. No, I think that's a great point. Kevin, anything from you?
No, I mean, I think the best way to sum up the way I've been looking at it, I mean, I think, like, especially now, it's a good time to take your time frame and kind of start working back up to like a weekly or even monthly. And you just start looking at some of your indicators and you can just see the work that kind of still needs to happen to kind of really get excited about some things. So, I mean, I think that helps put it in perspective a little bit.
I think that is a great mindset to end the podcast on. Yeah, these rallies we get over 3 to 4 weeks, they're exciting. They cause a lot of FOMO. We get, and there are still a lot of things out there that are holding up fine. Lots of individual stocks that look, I shouldn't say lots, but there's certainly a few that number continues to grow this week. We've kind of had some failures. We'll see if they hold up. As Dan said, we're kind of nothing too horrible this week, just consolidating here, but absolutely remains a market with tons of bifurcation. I can point to lots of stocks with great charts and lots of stocks with horrible charts that continue to make new lows week after week. All righty, that is all we have for this week. Thank you so much for joining us. Be sure to give us a high rating, 5 stars, or whatever the highest ranking on your podcast platform of choice. We greatly, greatly appreciate that. And also want to wish everyone a very happy Thanksgiving. 2022, I think, not that all year shouldn't do this as we get closer to the end of the year, but certainly a great time to think about things that we can be thankful for over the last year and things to be thankful for going into 2023. Have a great weekend, everyone.
Happy Thanksgiving, everybody.
Happy Thanksgiving.